Welcome to a new episode of Opening Bid. I'm Yahoo Finance Executive Editor Brian Sozzi. Now let's make some money and hopefully get a heck of a lot smarter. I would say we have a very special guest here and a very important guest while I think many traders are trying to figure out what do you do when a former president says they're not going to seek re-election. That is tastylive founder and CEO Tom Sosnoff. Tom, good to finally speak with you. I have no idea. I have not spoken to you before, but I appreciate you coming on here.
Sure. Thanks for having me. I'm looking forward to it.
Of course. Well, I really just had you on to talk about, your best call while golf caddying. I mean, we're just two former golf caddies trying to make sense of markets. I learned so much about life just carrying someone else's golf bag. And I would even argue a lot of those lessons still apply to trading stocks and figuring out the world of business.
There's no question that when I was growing up, actually just outside New York, I was grifted by a caddy master for about 7 years. And I think I learned more about trading from a caddy master that was probably 50 years older than me than anybody else ever learned from. So you know what? Not a bad thing.
Just the fact that you know the name caddy master, you immediately get street cred from me. I mean, my key takeaway was that, if I bought the caddy master a coffee and an egg sandwich, I didn't have to collect splinters on the bench. And I actually got a loop. There's another term, got a loop quicker. And I made my $75 and I went home and, spent it on candy or something. All right, well, let's get serious here. And you've been doing this for a while. Co-founder of Thinkorswim, tastytrade. You've seen lots of different market cycles. But let's start this off, Tom. How do you start your trading day, especially in this environment where there's really more, I would argue, market-moving news than ever before?
Well, I mean, this is decade number 5 for me. So 4 full decades. I'm into my 5th decade of doing this. So from a floor trader to building software platforms. But I'm a junkie when it comes to trading. So it's funny when you say, how do you start the day? Because I'm not sure that our day actually ever ends.
It doesn't.
I think I'm watching futures all night long. And so I'm not really sure where one day ends and the next day begins. But I mean, to be fair, on most platforms, traders will watch and see what the futures markets are doing. It's not so much about the news. It's about how the markets are reacting to whatever's happening. So I actually don't care that much about, why something's happening. I only care what is happening.
Do you have a basket of stocks right now that you look to, just given how fast and furious the news is, that you look to that could be potential canary in coal mines for the next moves in markets?
I watch indexes and I watch indexes, like I said, indexes, futures, things like that. There's probably, my watch list of stocks is probably just a little under 100, wow. But I would say the top 20 are the ones that I focus on the most. And those are the most liquid underlyings. They're not necessarily they're the most tradable underlyings, because I'm a derivatives trader. So I mostly trade options. And I do trade enough stock, but I mostly trade options. So I would say that my watch list, if you were to boil it down to where does 60 or 70% of the trades come from? It's the top 15 to 20 most liquid stocks.
So when you say liquid, is that, I'm guessing maybe that's NVIDIA, Apple, like the names everybody knows well? Yep.
Yeah. It's your top, 7 to 10 most concentrated stocks. And then you throw in kind of whatever is hot at the moment. There's probably about a rotation of about 5 stocks on top of those, 15 super liquid stocks that come in and out of that group, just based on, noise, activity, that kind of stuff.
What has really amazed me, I'd love to get your thoughts on this, Tom, is that how really calm, I would say, the VIX has been. Of course, people know the VIX is the volatility measure in the markets, sure. The quote-unquote fear gauge. It's still under 20, up about 24% in the past month. But given everything that's going on, why do you think we haven't seen that volatility spike?
Well, first of all, the VIX spends most of it's a weird animal. It spends most of its life in what we call a lull state, about 70% of the time. It only expands 10% of the time, and it contracts 20% of the time. And the rest of the time, it's in this lull state. So it's not that crazy unusual what's happening right now. The kind of the mean VIX is wrapped right around, let's call 17 or 18. So for most of this year, we've been, 25 to 30% below that. And the one thing, Brian, that's really cool about the VIX is it is the only number that we watch, the only indicator that's actually mean reverting by definition. So it's a math equation. So eventually the VIX will go back up. It's not tradable in that sense, but eventually the VIX will go back up.
Have you been surprised by the calm? And then, relatively speaking, just given how contentious this election is shaping up to be, I don't know. I think a lot of people have been surprised.
I'm actually, it's funny. It's the kind of election where you think, oh my God, it's everything feels like it's so nasty. But the other side to it is you also feel like until yesterday, maybe either candidate had no chance to get anything done. And so I think it was more of like that gridlock, deadlock type of situation where the market just said, hey, you know what? This is kind of the best of both worlds, because whichever one of these two candidates wins, it doesn't even matter.
What's funny, Tom, is that this is a market now that, to me, seems to have forgotten what the Federal Reserve may or may not do. It's so focused on maybe that upcoming NVIDIA and Mark Zuckerberg chat at a conference in a couple of days. But is the reality just that this market is going to trade on Fed expectations at least until the couple weeks before the election?
Well, so this is where I kind of differ from most other people that watch markets. I'm kind of a little bit of a freak about watching the bond market, and I trade it back and forth all the time. And I really think that the bond market, I don't think you have to listen to the Fed as much as you just have to watch the bonds. And I don't care whether you're watching the notes or the long bond, whatever it is, doesn't matter. They have been pretty much, the market's been tracking spot on with the bonds. And I don't think the Fed is going to do anything that's out of line with whatever the bonds are doing. So right now, with the bonds trading just a couple, like 119.5 or just under 120, I think the Fed's bet is pretty much made. And that's why I think the market has been, until last week, relatively strong, because I don't think the Fed has a lot of choices here. I think it's a pretty simple layup. As long as the bonds stay in this range, they have their cuts in line. And if the bonds were to drop down below 116, I think then most of the cuts are off the table. And if the bonds are to go back up over 123 or 124, then I think that adds another one or two cuts potentially, somewhere down the line. So I don't think that I think the bond market is leading the Fed, not the other way around.
How do you find time to do all this stuff, Tom?
Like I said, I don't really have much. I don't have any hobbies, and I don't have a life outside of this. So I pretty much, this is all I do.
I actually give that answer to a lot of my friends and family. I mean, this is truly what all I do as well. So I knew we were going to become fast friends. So let me get inside your head. So that a couple days before the next Fed meeting, how should investors be thinking about trading that? Wherever you want to take us, Tom. Options, stocks, like what are some top plays that they may want to look for?
Well, a lot depends on where we are, obviously, a few days before the next Fed meeting. And it also depends on your appetite for risk. So, for example, like I'm a premium seller. So for me, what I'm hoping for is a few days before the next Fed meeting that there is an increase in volatility to the point, and we're talking about maybe a marginal increase in volatility to where there's some premium in the S&Ps or there's some premium in the bond market that's worth selling. And that's not a guarantee, especially if you're looking at kind of some of the indicators with respect to what the Fed's going to do. If there's a 99, on the CME tools, if there's a 99 or 95% chance that the Fed is going to lower rates, then there's not going to be much to do volatility wise. But I like selling premium going into those numbers because I think that that's the elevated premium is an interesting way to play it. I also like, I'm always a contrarian trader. So I'm always looking to either buy something that seems cheap relative to everything else, or obviously to sell something that seems super expensive relative to everything else. So I'm not a trend trader at all.
Do you trade potential black swan events, like a little portion of your portfolio that you say, you know what, maybe this crazy thing happens?
No.
Why not?
Because you can't, because it is a mathematical impossibility to predict a black swan event. That's why it is a black swan event. When you get outside of, you're talking about something way outside of three standard deviations. So you're into the, one in 100,000, one in 10,000, one in a million, and when you get into those kind of numbers, that's a black swan like number. You're talking about something that is a complete waste of money. You're gonna piss away money for years waiting for that one event, and when it happens, you won't even know it's happening. You won't be prepared for it. Like, it's not something that's predictable. So if you want to maintain a little bit of short delta, which just means some short positions to cover portfolio risk, I'm totally fine with that. But if you're playing for a black swan event, impossible. You can play for a sell-off for sure, but you can't play for a black swan event.
I don't want to take a quick break, Tom, but I have to. So hang with us. We'll be right back. All right, welcome back to Opening Bid. We are talking to tastylive founder and CEO Tom Sosnoff. Really good. I really love this conversation with Tom. So, do you see anything in the markets? I think back to, I think it was Mike Wilson over Morgan Stanley 2 weeks ago calling for a potential correction. Are there red flags in this market? Which, look, I mean, it's still trading near record highs. Are there red flags that you are seeing that might be suggesting a correction may be coming soon?
Well, I mean, the obvious red flags are, just the concentrated movement that we've seen all year without really any correction whatsoever. I mean, anytime you get a market that's essentially, hyperbolic in one direction, I think everybody should be nervous about a correction. And did we have a little bit of a pullback last week? Sure. But is that really a correction? I don't think so at all. So, I think you should be nervous based on the fact that, one of the things that we look at is like skew, and that's telling us that, there's a risk of an outlier move here. And the other thing is, like you mentioned before, volatility, when it's super cheap, has the greatest risk to investors because it's not predicting. All volatility is expected move, and it's not predicting a big expected move. So if you get that, it's going to catch people by surprise. So I think anytime you have a move in one direction for an extended period of time, that everybody should be concerned because it's not like mean reversion, but it just means at some point sometimes gravity takes over.
Is there a potential event on your radar that could trigger that sell-off? I mean, it has to be. The bar is pretty high here. Is it Nvidia not coming out and raising its guidance again by another $1 billion in sales? I mean, is that the trigger point, or is it a Fed disappointment? What are you looking at?
Like I said before, I don't think the Fed can disappoint because I think the Fed's decision is going to be directed by the bonds. Mm-hmm. I think you could have a surprise. I mean, obviously Nvidia hasn't really, except for the last couple of weeks, hasn't had a downtick in 2 or 3 years. So, I mean,
totally
surely
normal.
There could be
totally normal stuff.
Yeah, right, exactly. We always get companies going from 500 billion to a couple trillion. Yeah. But and Nvidia, in my opinion, has many single points of failure, and so there could be some risk there, but it's impossible for anybody to take a step back and say, hey, this is what could turn the market around, because it's never what you think it's going to be. Like, it's not predictable. It was predictable, it would never happen. So whatever is going to eventually turn this market around, I don't think it'll be political at this point, and it could be something corporate related, but I don't think so. I think you're going to see, if anything, this market looks like it might stair step lower as we do some form of sector rotation. I do like, what started a couple of weeks ago, but kind of is not happening this morning, but what happened a couple of weeks ago when a rotation into the small caps out of some of the, NASDAQ stocks. I think you could see a lot of that the second half of this year. Explain
that to us, Tom, that rotation into small caps. It's something I've been watching through, through IWM. It is interesting because we've gotten a little bit of a slowdown in jobs. Growth has slowed down a little bit. I mean, consumers are not spending at this mind-blowing clip, but I hear the small caps. I mean, what's the message from that move?
Well, I don't care about the fundamentals or the technicals because that doesn't mean anything to me. Mm-hmm. But I mean, the small caps have underperformed for almost 2 years now against the S&Ps and against the Nasdaq. So I think when you look at essentially, we call that a basis trade or a basis arb or a pairs trade, whatever, however you want to describe it. And when you look at that, those two indices, they should have a very high correlation, and they haven't for the last 2 years. I mean, they're both just stock indices. They're both benchmark stock indices. So what I think is going to happen is you're going to see rotation back into some of the growth sector, some of the smaller growth sector, and you might see, money has to go somewhere. And so I think it goes into the small caps, and it comes out of, some of these high flying concentrated NASDAQ stocks. I don't think it's any more than, hey, you know what? This just makes sense because it's just an unwinding of this heavy concentration we have at the top of the NASDAQ funnel right now.
Now that President Biden is not seeking re-election, Tom, and Vice President Kamala Harris, her hat's in the ring. She's ready to rock and roll. Does the Trump trade unwind?
I think so. I think people are way too bullish on Trump at this point, and that might change, dramatically, in a day or so and through the convention. But I think you're going to see, within 30 days this being a dead heat, and I do not think that Trump has this locked up by any stretch. I think people that are jumping on that Trump trade are making a huge mistake because this thing is going to go back and forth. I don't think Trump is a good front runner. I think Trump is much better when he's playing from behind and he gets to, and he gets to play that underdog role. I think when he's out in front, he's a liability to himself.
Well, then that raises the other question, Tom. I guess there's two parts to this one. One, as a trader, do you even try to play some of these election themes? And if you are inclined to, is now the time, rotate out of the Trump trade and maybe put some money behind solar plays or EV makers in the potential for President Kamala Harris?
That's a very difficult thing to do as a trader. I would say that you're better off at this point trading the stuff that you like, staying in liquid underlyings, keeping your size relatively in check, and trading and making trades and investments that you like, and not trying to play kind of a political game, the political house of cards. And I would stay away from trying to guess who's going to win or what's the next move going to be. I would just treat it as, the market seemed absolutely indifferent at this point to to who's going to be the president or what's going to happen. Like I said, I think we're kind of gridlocked or deadlocked, and I just don't see the political side to this playing that big a role. So no, I would just trade as you would normally trade going into this election. You are going to see heightened volatility. Started last week, and I think that's going to continue all the way through October. If you look at the forward curve in the VIX, it's going up all the way through October. Then it starts to drop off again in November and December. So I think you're going to see a really interesting two-sided trade all over the board for the next 3 months. And you have to, you're going to be attracted to the noise, but you have to stay away from the story behind the noise. Just trade the noise because that's always the fun part, but stay away from the stories and the storylines and all the behind that.
No, that's fair. That's fair. I still want people to come to Yahoo Finance, Tom. I mean, come on, we got stories. We got bills to pay.
Of course. Love you guys. Don't get me wrong.
Likewise, the feeling is very, very mutual. So look, 1 week before the election, do you expect a Volmageddon type environment for people that have no clue what I just said? I mean, that's really an explosion in volume because I guess of market uncertainty.
Did you say volume or volatility?
Volatility. Sorry.
Right. So from a volatility perspective, it based on the last, going all the way back to 2008, I would say, and remember, in 2008, we were in the middle of a meltdown, so it's very hard to compare that. But when you look at, 12, 16, 20, and all those elections, there was no such thing as a Volmageddon. There was no such thing as volatility exploding prior to. In 2016, there was a vol explosion after the election. But in most cases, the VIX forward curve looks pretty good right now for vol. I'm guessing that vol is going to creep higher, but unless there's something that's totally unexpected, I do not think you're going to see a vol explosion. I think you're going to see vol steadily advance. I mean, listen, as a trader, an option trader, I would love to see vol in the low 20s. I mean, we haven't been there in forever. So I would love to see vol in a perfect world, somewhere between 17 and a half and 22 is the trader's dream for volatility. That gives you perfect two-sided trade and plenty of premium.
All right, we have a couple minutes left here, Tom. I'll do a little around the horn. Let's start with options. Give us your best options play. You know, something you have written down on your pad of paper. I'm assuming you still have pad and paper. You're still doing that thing. What is a great options play that I would say an experienced trader can put on right now?
You mean strategically?
Yeah.
Or
surprise us.
Yeah, or what? Say it again.
Surprise us.
Okay. So, I mean, there are a lot of different plays that I like, but if you're an experienced option trader, you're looking for something that's cheap relative. I like selling puts in some of the Chinese tech stocks like Baidu and Baba, because I think that they're cheap relative to U.S. tech stocks, and they've gotten and the puts still have some decent premium. So I like the short put side of some of the Chinese stocks. I also like the short premium side in the Russell, because the implied volatility rank and the implied volatility in the Russell is the richest of all the U.S. indices right now. So it's trading, premium is trading very rich in there, and I like short strangles, wide short strangles in the Russell right now.
Oh, love it. I mean, anyone who could come on here and talk about strangles on a Monday morning is okay. And a caddy master is okay in my book. So let's say someone watching this or listening to it on podcast, Tom, they want to be like you. They want your experience, but are unlikely to work on a trading floor. What are some steps they could be doing today to improve their financial understanding and then just improve their ability to trade with success?
Sure. Well, I mean, the best thing you can do is to actually trade. I mean, there's no substitute for putting on positions and learning. You know, in 2024, the art of trading is really about capital efficiency and making sure that you're on a platform. Like, for example, tastytrade, because I don't want to speak about other platforms, but tastytrade, you know, supports every single product. We're completely indifferent to product or strategy. So, you know, customers in this era, especially if they stick to liquid stocks, they should just use a broker whose simple objective is to facilitate opportunity. In the last 25 years, you know, we've built two platforms, Thinkorswim and tastytrade. And I think they're still the best two platforms in the world. And on either of those platforms, but specifically Tasty now because it's newer technology, you can do whatever you want to do. Doesn't matter. Just, you know, it doesn't make any difference at all. We're agnostic to strategy. We're agnostic to underlying. Doesn't matter. Everything's in play.
Who was your mentor, Tom, and what did you learn from them?
Outside of the caddy master, Jimmy Rocco from Scarsdale Country Club when I was 13 to 20 years old, which was a lifetime ago, I did not have a mentor, but I learned a lot from when I first got to the floor of the SIBO in the early 80s, I learned a lot from some really, you know, fast thinkers, some fast traders, and that I would just sit there and stare at, you know, just amazed at the way their brains worked and the speed at which they make decisions. I would say the biggest takeaway for me was brain processing speed. Just at the speed that you can make decisions is usually what influences success more than anything else. Quick decision makers are the most successful.
Well, we're going to leave it there, Tom. One, I encourage everyone to go check out tastylive. It is just it's a unique platform. It's forward thinking in large part. I know there's a lot of people behind the scenes doing that, Tom, but you know, you of course are leading the charge there. And just go read up on Tom Sosnoff. I mean, the guy's, he's just an OG. Tom Sosnoff, tastylive founder and CEO. Thank you for joining Opening Bid. We always appreciate your time.
Thanks, Brian.
And that's it for the latest episode of Opening Bid.